You guys at Bespoke are really good at sort of noticing patterns and how the market reacts to trade headlines. Is it different than it used to be in this current environment? It feels like even more sort of volatile and unknown and trade by tweet.
Hi, Sarah. Yeah, we've seen a lot of volatility stemming from tweets from the president, especially related to trade, really more than anything else over the course of his term since he first entered the Oval Office. And it's quite frustrating as an investor to look at, not only because the U.S. economy is relatively closed and trade matters are relatively small as a percentage of GDP, but also because there's so many mixed signals that come from the president. It can be very confusing what's real, what's a negotiating tactic, why the markets should be paying attention to one thing and not to other things. And I think it's a source of a lot of frustration for folks that are trading the market intraday.
Interesting. You guys had a note out earlier today that we cited on the halftime report where you say, quote, not you personally, but the firm, there is simply nothing worse than being blown out of a position because of a very short drop fueled by a combative Oval Office missive. We would suggest that tight, unmanaged stops simply can't be used in this sort of environment. This speaks to the twists and the turns as we're looking at on the wall that we made back at our headquarters of trying to deal with this sort of market.
Exactly, Scott. So our point there is not that investors shouldn't have stops that they respect in individual names, but just whenever they're going to sell a stock or buy a stock or manage a position, that they're the one clicking the button and that they're doing it because of an actual change in the underlying business of the stock or their view of the stock, as opposed to some headline that's just crossed courtesy of the president's Twitter feed. And again, that doesn't mean you can't get out of positions when you feel like you've hit a stop or something like that. But having open orders in the market in this kind of environment can be very challenging because what happens on the president's Twitter feed can come out of nowhere and put you into a position you don't want to be and create a lot of frustration. So from a psychological perspective alone, it makes sense for investors to be a little more patient and just manage their positions manually as opposed to doing something like a market order on a trailing stop.
And George, you mentioned that it's on trade matters that the president's tweets seem to have the most acute reactions. And I wonder if it's just because the market doesn't really have a process that it's independently able to monitor and handicap when it comes to these negotiations. It's really kind of the preferences of the executives involved, of the two principals involved. If that's the case, then do we just have to wait for that issue to go quiet to sort of know exactly where the real market is?
Yeah, so trade is relatively unique in that the president has some pretty broad powers with regards to imposing tariffs that don't apply in areas where legislation through Congress is required or where legislation could be challenged through the courts or other metrics. So basically, the president can do a lot on his own, and therefore his mental state and the way he thinks about how the trade negotiations are going makes a big difference, whereas in other areas, his views are maybe a lot less important to the crux of making policy. So that's definitely a factor. And as you said, there's just so much opacity in this whole process. We don't know exactly what's being said by China. We don't know exactly what's being said by the United States. We're talking about a bilateral negotiation where the goals of each country, let alone the actual things that are being communicated, are a little bit opaque. So modeling how trade goes between the United States and China and how the dispute evolves is very difficult, which means that every time there's a substantive piece of new information, such as a tweet from the president, markets are going to react quite dramatically, even though, again, trade is relatively unimportant to the U.S. economy, and historically this hasn't been something that's gotten a lot of attention.
So is the advice buy on the dips or just do nothing and ignore it?
Yeah, it really depends on the market environment. So right now, we wouldn't say, oh, go in and buy every time there's a trade-related dip, because to where we look at the markets, the trade-related dips and the trade-related rips are similarly not representative of where the market is right now. We're not super optimistic on stocks or super pessimistic. Therefore, we can't see any short-term pop or short-term drop in the market as something that should be acted on. Rather, it's just something you have to digest and move on and focus on what you're actually trading, whether that's an individual stock, whether that's a sector, whether that's a portfolio, whatever it is. Focus on what you're actually trading as opposed to the noise that's coming through the top-down market courtesy of these presidential tweets.